All right, welcome back to our trends module training. This section is on breakouts. Trendline breakouts. There are some clues that I have developed over the years that tell me when it's most likely for a trend line to be broken out of and give me the best opportunity or location to place a trade. Now, this is a little bit more than technical analysis. I'm actually teaching you how and where to place trades. So this is the first strategy you're going to learn in this series, in this whole training program. And I'll tell you what, this is my bread and butter. Using trend lines and trend line breakouts is really, I mean, that's where it's at. There's a lot of really cool strategies I use that I've developed, that I've used from others that work well now and then, but the trend lines and understanding when and the high probability of trading them when they're breaking out is really a key. So I've marked up a few charts to give us an example of the different types and ways, so you'll have plenty of examples of a trendline breakout trade. So in our earlier video on trend lines and trend line placement, this is a downward trend, and so we place our trend line on the top of a downward trend to designate when it breaks through that, it'll change into an upward trend. So that's what we do. We've got a high point here, we've got it riding a high point here, we've got a high point here, we've got the point right here where it's riding again. The market's losing its downward momentum. That's also a clue that the market might be shifting direction. Now, my rules for trading a trendline breakout, are that the market has to hit at least 3 times. 1, 2, 3. And this time we've got 4, so that's good. That's bonus. Okay, 4 times. The next rule is I will have to wait till it either tests the market or retests the market. So what that means is if I have this downward trend, this top trend line on a downward trend, and the market hits that, and hits that, and hits that, this is the test. Okay, let me back up. This is test number 1, where it didn't make a lower low and it came back up. Okay, so that's kind of showing me that we've changed out of the mindset or out of the downward trend. We're starting to get out of this downward trend. Starting. Okay, we had the video on when trends change directions just recently, just before this. This is clue number 1 that we didn't make a lower low. Okay, so I've got 3 points. That's rule number 1. Clue number 1 is I'm not making a lower low and I come back up. So this is what I call this is a test. This is test number 1 in the market. Okay, I have to have a test in the market for me to place a trade, whether it's a before test or an after test. So it's a test before it breaks out or it retests. And I'll show you the difference on different examples. Okay, this example is just like this example. Okay, I've got this low, which corresponds with this one, and then right here, it didn't make a new low. So that's clue number 1, okay, and it came back up and retested after that. So here's that, made the low, came back up, didn't make a new low, and is testing the market here. All right, so what I can do is, because it's testing the market ahead of time, and it's bounced off of that right here, and it's coming back down, that my rules say that as soon as it breaks out of that trend line with any bit of volatility, any bit of volume, okay, not the first pip, but to scale, this is a 1-hour chart, so I might wait for 10 or 15 pips to make sure that it's committed to breaking out of that trend line. Then I'm going to get in going long. So if it breaks out above here, I'm going to get in at maybe this level. All right, so let's see what happens. We walk this forward, hit the F12 key on your keyboard to move the chart forward one at a time. Okay, there's 10 or 12 pips. It hesitates. So if I were to get in right there, because I see that breakout, it's taking its time. It's making me nervous. Hesitates a little bit, comes back down, but my stop loss on this trading strategy would be to put a stop loss down below the most recent high. So it would have to be below this section right here. So my stop loss is going to be right about there. And I'm going to be going for at least that much. Never have an upside down stop loss to where you're risking more than you're going for or more than you're expecting. That's part of the money management section of this trainings. So let's keep going here. My stop loss is still safe. Boom, stopped me out. But we got this trend line breakout. It broke out. It went up a good 50 pips before it came back down. So this here, if you're seeing this come in here, this is part of the trade management. This one stopped us out if we would have stayed in it too long. How long were we staying in it? Well, what were we going for? If we were risking 59 pips, we should have gone for at least 59 pips, and we didn't get it on this one. Okay, but those are the rules, and you got to get over the fact that you're not going to win every trade too. Okay, those are the rules for this trendline breakout. It has to have 3 points. It has to test it either test a line ahead of time or after, and you can trade it after the test. And then you put your stop loss down behind the most recent high or low, depending on which way it's breaking out. All right, so let's look at the next one. Here's one on the US Swiss franc. We've been going sideways a bit here. The market starts trending down. We've got 1, 2, 3, 4 points. Okay, it's got a low here. It comes up and tests it, comes down, makes not a lower low, tests it again. So we're looking at, it's sticking these wicks up here, trying to test it out. So let's put a trade about right here. Say once it's really confirmed that it's going to go out, you can put a pending order, and let's see what happens. So F12, sure enough, we get triggered in right here. Our stop loss would be down here below this low here. So it would have to change back into a downward trend to get us out. So with that, we've got about a 60 pip stop loss. Nope, that's 35 pip stop loss. So we need to be going for at least 40 pips here. So there's 48. That'd be a piece of cake. But let's see what happens. Sure enough, it gives us 80 pips. So doubles our take profit, or for our stop loss that we could have gotten it. So if you get out with 45 or 50 pips, great. Okay, don't think you're going to get all 80 every time. That's certainly not going to happen. And then sure enough, we change back into a downward trend. We get one big motion, comes down, flirts with our stop loss. But by this time, you should have taken profit or moved your stop loss up. And that's part of the trade management program that we'll learn about later. Okay, so next example. Now this one tested ahead of time, didn't make a lower low, and then broke out. Okay, so let's look at the pound dollar. Sure enough, we've got a real nice trend line here. Ding, ding. It's like riding it along here. That's a good sign. Tags it here, pokes through a little bit. I have to adjust my trend line to line up with the main theme of this, the main angle of this trend line. Tags it here, tags it here. So I'm looking for a downward trend because I'm expecting this to break out going south. Here's my top. Okay, that's the top of the move. Downward trend. It's bounced off of that. Looks like it might be testing. Sure enough, it's bouncing off a ways. So there's my test. Comes back down. If it breaks out, I'm going to get in right here. And I put a stop loss here above this high. Okay, right above this high here, maybe a little bit. Give me some buffer room. So if it breaks out, I'm going to get in here. I'm going to have about a 55 pip stop loss. And I'm going for at least 55, probably 75 or 100 pips. So let's put it right there above that psychological barrier. So I set this trade up and I go to bed. Now let's see what happens. Sure enough, we get this test. So it bounced off there, didn't make a higher high, so that's the test. Breaks out, we jump in here, our stop loss goes in, our take profit goes in. We went to bed. We wake up the next morning with 90 pips in our account because it broke through that trend line and it gave us all the clues. It had good touches on it and it broke through pretty strong. All right, let's go look at the US CAD. Let's look at a different kind where it tests after. Okay, so here we've got 1, 2, 3 points in an upward trend. All right, here it's not making a new high. Let's see what we have here. So this one's actually tested ahead of time. Bounced up, came down. And then this one actually came up and retested this market. Okay, so it tested here, broke through, went sideways, and then retested. Okay, this is a test. When it breaks through and touches on the other side, it's a retest. All right, So if you got in here going short, you put your stop loss above here, you'd have lost because it came up and retested. One of the clues, one of our rules for placing stop loss is putting it behind where the market's been recently. Okay, so the market has been here recently, so if we put our stop loss up here, with the train here, you've got about an 80 pip stop loss. But what are we going for? This is a 4-hour chart, so 80 pips isn't as much as it was on a 15-minute chart. So we'd see that, and we'd say, okay, if I got in on an 80 pip stop loss, if I got in right there, I have my stop loss up here at the top, right above that high, so that if it could come back up and touch that again, it'd have to go into new territory up long to get me out. Sure enough, it didn't quite make that. We still haven't gotten myself into profit. If that's 80 pips going down, I want to put, 150 pips going, or 80 pips stop loss. I want, a double that. Let's go 160 pips, take profit, and let's see what happens here. Hesitates. We're just going sideways for days. It finally did hit our take profit, but I wouldn't have stayed in that long. I would have recognized this going sideways. I would have locked in my profit at a certain point as part of my trading rules. Once I'm up over 60, 70 pips on a trade, I'm going to lock in my profit, depending on the scale I'm trading. But it did take a time, but it did get down and hit your take profit level if you've got the patience to watch that. But that's the retest. That's where the market breaks out and then retests. Okay, here's one on the Australian dollar. Market's going down, comes up, tests a couple times, goes down, makes a new low, touches it, comes down, makes a new low, touches it, okay, and breaks out. So it comes up and breaks out, and then it gets to the retest here. And this one actually retested a couple times and then went long. So you can see how the markets play on these trend lines. Some people only take trend line breakouts that are retest ones instead of trading them when they break out. There's a little bit higher probability of success if you're trading on the retest, and you get a better risk-reward ratio. Now what that means is that if it's bouncing here and you break out, a lot of times it's going to retest, and so if you're going long, is it better to go from here or from here or from here? Okay, if you're putting your stop loss down here, you're getting fewer pips in the move from here. Let's say we get to here. You get more on the retest here and even more on that retest. So being patient and waiting for the retest can be a benefit. Either way, you have to wait for it to either test or retest if you're going to follow the strategy I've put together. A lot of people don't have those rules and they just wait till it breaks out and then they get in and there's no test, there's no qualifier to give them the probabilities of a more accurate trade. And so that is the basics of a trendline breakout test, trendline breakout trade. Whether it's testing or retesting is the same thing. All right. And our next video we're going to do is a short one on trading in a channel. So hang in there. We'll be back in a second.